Hey guys, David Robinson here. Welcome to the apartment investing journey. Looking forward to our conversation today. I've got a great guest lined up for us today, Jordan Atkin from Salt Lake City, Utah. How are you?
I'm doing great. Thanks for having me on.
Yeah, my pleasure. Looking forward to getting into your story today. I've watched you from afar, and you've done some impressive things over the years, and really looking forward to breaking down your path and the journey that you've taken to get where you're at today. Jordan has been involved in the real estate business full time, I believe, since 2010, roughly. Has had a lot of experience in rentals, fix and flip, new construction, commercial, apartment building. So he's very well rounded. Currently, Jordan manages TAG SLC, which is a real estate investment and development company focused on multifamily infill projects, mainly in the Salt Lake area, correct?
Yep, that's right.
Okay, cool. Well, Jordan, if you can, back up. We always like to get the entire story and the whole journey. A lot of people don't like to talk about themselves, but we want to dig it out of you. So if you can, back up and tell us how you even started the transition into real estate back in 2010, roughly.
Sure. So I grew up in a small town right between Salt Lake City and Reno, Nevada. Elko, Nevada is where I'm from. About 18,000 people, graduating class of 260 people, one high school. So small town, and I was ready. Knew that wasn't for me, and was eager to get out basically as soon as I could. So a couple weeks after I graduated high school, I moved down to St. George, Utah. At the time, I was trying to play golf competitively. So my whole strategy, go somewhere I could play golf year round where it didn't snow too much. So I made an effort at that for about a year to 18 months before realizing and really just having great opportunities to golf with some really fantastic players, and realized that I was pretty good, but I wasn't gonna do much better than living in a van driving around the U.S. For the next 30 years. So I wanted something a little bit more, and I think your path's a lot easier to see looking in the rearview mirror instead of how it happens to you. There were just a lot of things in my life that kind of guided me to real estate. So I was just working at a golf course, doing some of that stuff, had interaction with some people in real estate, and then that's kind of where I got the idea of, okay, hey, I can probably transition into real estate and still maybe pursue the golf on the side, but this will be a little more financially rewarding.
Interesting. So was there any moment in particular, and what was it about the interactions you had with people that were involved in real estate that sort of sparked this inside of you to say, hey, maybe this is the right path for me?
Yeah. So, going back even further, when I was going into the sixth grade, outskirts of town, which in a small town like that was really boondocky. And I saw kind of where I rode my motorcycle turn into a subdivision. So there was some underlying interest there. And then one of my best friends in high school, his mom was a real estate agent. She had encouraged me to go into the business. And then fast forward, looking at the golf course, most of the people who would come Tuesday at 1:00 were these real estate agents. They'd show up in their Porsches and Escalades. And I was like, man, that seems like something I would be into. So it seemed like a transition that wasn't too scary because I kind of touched it a little bit along the way.
That's cool. That's great. Well, so talk to us a little bit about that transition then. So here you are, golfing, you recognize that, hey, maybe real estate is a good path for me. What was that transition like for you to actually pursue this path?
Yeah. So not knowing really anything, I started with getting my residential real estate license. And the best advice I got was go put your license with a large brokerage where you can kind of promote their experience and sales track record instead of your own. And also just get some really good education and surround yourself with, top producers and basically just copy what they do. So I ended up hanging my license with Prudential Real Estate down in St. George that just so happened to be owned by a mid-sized production home builder down there. And it really took off when we were just at a sales meeting. The sales meeting wrapped up. And then after that, some of the people stayed. So I talked to the receptionist, hey, what's that about? Oh yeah, those are the model home agents. And I thought, model home, what's that? And then learned, oh, you go sit in this brand new house and then people walk in your door and want to buy from you. And I said, why wouldn't everyone want to do that?
Sign me up.
Sign me up. So I got like the little certification that was required and basically begged all these old guys, hey, if it's your grandkid's birthday, I'll come work. If you want to go play golf, I'll come work. And, started gaining some time in the seat and then had some sales and some success. And, that was kind of the launching point of my career.
That's great. So you started out in new construction, model home agent with a brand name residential broker. All right, bridge the gap from that and how you got to where you're at today, which is development and commercial real estate.
Sure. It did not take me very long to realize I was never meant to be a real estate agent. I don't really have the personality or temperament for it. And this was in 2010, so things were kind of in shambles. All the workforce had pretty much been laid off. So I just started working into project management for that builder. It was really just babysitting. Hey, the concrete, really just started when I had a client who was in town from out of town. They were relocating or like getting a second home or something down in St. George. The concrete truck was supposed to be there to pour the foundation. It wasn't there. They were upset. So I called, and that kind of just sparked this like babysitting, AKA project management for the homes I sold. Didn't screw that up. So then they gave me the subdivision, didn't screw that up. And then oversaw probably 80 homes from 2010, end of 10 to 2013 when I relocated to Salt Lake City. And then again, just because of the time, I've been on a really strong ride with the market and been really fortunate to have that wind at my back. So we just bought homes, foreclosure homes off MLS and off, the auction websites. And I had a list of people who were hanging sheetrock and setting tile at these production homes. And I said, hey, do you want to pick up some extra work? Helping me sheetrock on the weekend or putting in some cabinets, and everyone was ecstatically, yes, please. So then that's kind of how we started flipping homes, utilizing those resources, and grew that business up a little bit, and then took those profits and started investing in just single family rental properties.
Real quick, I want to back you up just slightly to your move up to Salt Lake. What took you from St. George? Was it strategic? Was it family? Was it, what was it about that move from St. George? For those that aren't aware, St. George is about a 4-hour drive. It's a completely different climate. It's a smaller city in, southern Utah, and he's making a move up to Salt Lake, which is, the main hub here.
Yeah. So it was a little bit of family and strategy. My brother had just graduated high school. He's one of my best friends. So we were kind of strategic that wherever he was going to go to college is where I was going to, relocate so that we could, continue that friendship and bond. And kind of also I recognized that St. George was a great place, but I didn't know if it was big enough for me to reach my full potential. So I kind of wanted to test myself in a larger market where I was going to be able to, operate in one specific place for a 30-year stretch. And I had some really good momentum down there. So that was hard to leave, but ultimately, just looking forward.
Yeah. Okay, great. So you're not unlike, and I think a lot of our listeners will be able to relate to your story and different facets of your story, in the sense that a lot of commercial real estate investors start out in the residential space, whether it be residential sales or fix and flip. A lot of guys start in the fix and flip space to generate cash. Talk to us about your transition from fix and flip residential and moving into more of the commercial and development realm.
Yeah, it was very profound. I was at dinner with a business mentor that I had and telling him, hey, I'm not feeling like I'm getting the growth that I want. What can I do? And he gave me two pieces of advice that I'm still chasing. One, do bigger deals, and then two, find the tenant first. And that's basically all he said. And so I went back with one of my buddies, Tyler Tolbert, and was like, hey, here's the holy grail, do bigger deals. And we scratched our head about what does that mean? How are we going to do this? We're just trying to buy little 20,000 down seller finance deals. How are we going to transition? And I don't know where along that way it came, but after a couple of weeks of talking about it and thinking about it, we said, I think that multifamily could be that way. I was doing very high end, flips at the time. This was, 2015 in Salt Lake City, $700,000, $800,000 homes, kind of pretty high end for our market. And I knew I didn't want to just push higher into higher sales prices.
Hey, Jordan, hold on one sec.
Yep.
I think we got a little bit of delay. For those that are listening, we're in the middle of the coronavirus, and
Uh-oh.
hey, you there?
I'm back. Yeah.
All right, sweet. Sorry. Not sure what's going on there. I think it's Zoom, but
A lot of people using the internet.
yeah. I don't know if you heard my little my little spiel on that we're in the middle of the coronavirus. But anyway, so let's pick back up. You were talking to us about this doing bigger deals. You had got this advice from a mentor to do bigger deals and find the tenant first, and you were talking with your partners about doing bigger deals and moving into multifamily.
Yeah. So again, we were doing pretty high end flips and didn't want to just keep pushing the envelope in that direction. Too much risk in my mind. And then somewhere along the way, we said, well, what about multifamily? I had flipped some duplexes and fourplexes and had those in my portfolio. Well, what if we can just put more doors under every roof, every transaction? That's how we're going to grow. And then it's going to be offset because each individual door will, still be fairly modestly priced. And that was the big epiphany. And starting in December, I looked back in preparation of this. And as of December of 15, we've been exclusively multifamily and larger commercial type asset investors.
That's great. So let's dive into that a little bit. Talk to us about some of the challenges that you faced early on when you were trying to make it. I mean, it's no small feat, right? I mean, it's a different animal moving from single family into multifamily. And so what were some of the challenges, if you can think back to that time frame, December 2015 into the early part of 2016? How long did it take you to find your first deal? What was the strategy? And what were some of the challenges you faced?
I probably have a self-limiting belief that capital is something that holds me back. I wasn't as in tune with, I didn't know anything about syndication until maybe even just a couple years ago after I'd done dozens of deals already. So just like thinking, how are we going to come up with these down payments? Some of the qualifications, it's a little bit of a chicken and an egg. They want you to have experience, but how do you get experience without doing a deal? So getting the actual deals wasn't overly difficult for me because we're fairly involved in the market. It just was saying yes to the right opportunities and trying to hone in a little bit on what that is. But just understanding the process, the valuation, which ended up being a huge benefit, right? You grow your NOI at the same cap rate, your value absolutely spikes. So it was really easy in that regard to see the benefits, but just understanding how those numbers, some of the jargon, understanding how to accurately talk to brokers, and then for me personally, turning off the spigot of my primary business, which was flipping homes, and saying, I'm not going to do this anymore. I'm going to transition. It required us to realized that we were probably going to run out of capital pretty quickly. And so that started the pursuit of finding, passive investors who wanted to come along for the ride with us.
That's great. Okay. So, when was your first foray into new construction and development? If I understand what you've explained correctly, you went from fix and flip residential into multifamily, but you focused on existing initially. Is that correct?
We kind of just said all things multifamily.
Gotcha.
So in December of 15, I bought a duplex, a 5-unit, and I think it's around a half-acre lot that I entitled for 8 units all that month. So we kind of said anything real estate. The development kind of came because I had some of that background through building. That was more from finished lots up, but I had a lot of confidence that if I could figure out the entitlement process, I felt really confident I could get things built.
Gotcha.
So we just, saw opportunities where the zoning was in place and we said, let's try it.
Okay. So would you say that you now are still open to both existing value add or existing deals regardless and development, or are you focusing on one area over the other?
Yeah, I think something for people as they go through their career is to be, fairly open-minded that your strategy can change and, be open to kind of pushing back on what you've done in the past. Obviously look for where you've had success and maybe follow that. But we've kind of reinvented ourselves several times since 2010. And right now our primary focus is actually finding existing commercial assets that have cash flow in place that can be developed in the future. Not today. We have a couple that we've closed on, one with the 10-year lease, 7-year lease, 4-year lease, 5. So we're really trying to build our pipeline well into the future and are pushing away, especially where we're at in the market, even without COVID, just kind of thinking we're late cycle. So just buying a piece of dirt that I have to do something with today is something for the last about 18 months I've been pushing away from. Yeah,
makes a lot of sense. Okay. So is there any particular product or I guess the question would be, what's your ideal opportunity at this point in time? I mean, if you were to sort of think, okay, what would I really want to take action on today, even under the current economic challenges that we're facing, what would that deal look like for you?
I think that's a great question. I would probably I'm in the market and I saw one today. I'm looking for 5 to 20,000 square foot commercial properties on half an acre or more in Salt Lake City. That's kind of really what our focus is right now.
And what about that criteria is important to you? Why is that appealing?
Well, the number one thing for me is the geographic location. I think that's something that's definitely different about us. Is I almost everything I do is in Salt Lake City proper, not Salt Lake County, not Utah, Salt Lake City proper, north of the 80, east of the 15, which are 2 major highway systems in my market. I'm super bullish on the prospects of Utah as a whole. And then I live downtown, so I can kind of see the appeal of why people like me, would want to be down there. And that's where we want to choose to invest our dollars. And Salt Lake City also has some of the most aggressive zoning. So for what I do, that they kind of go hand in hand. So it gives me the cash flow metrics that I like today, with the future development opportunities that I understand at a pretty strong level.
That's great. Thanks for walking us through that. I want to transition into our Deal Dig segment and talk about this 20-unit value add. But before I do, one last question for you. You've mentioned a handful of times as you're describing your business and the decisions you've made as we. Do you have partners involved in your business with you?
Not. I own 100% of TAG SLC, which is our main operating entity. I do have a variety of other partnerships that do different things. Some people more involved, some completely passive. But I think anyone who's in the real estate business we look at it, with a clear eye, it takes an army of people to do what we do. I may get a lot of the credit for the successes, but from, the property managers to the construction guys to the people at the city, it takes a lot of people to do deals. And I really try not to take that lightly.
Cool. All right. Yeah, I just want to touch on that and clarify. All right. Well, let's dive into this 21 unit value add deal that you did in Salt Lake City, if you're okay with it.
Let's do it.
All right. So if you can, maybe just describe the asset to us.
Sure. So mid 70s construction, brick exterior, mansard roof, with some I think 10 tuck under stalls, three stories, kind of built into the side of a hill. That's kind of the what is it? Six 1-1s, 6 small 2-1s, and 9 larger 2-1s. So
okay.
Heavier on the 2s, which I really like. Nice and uniform, which is not all that common here in Salt Lake. A lot of the other stuff I have is, big Victorians that have been chopped up. So nice uniform asset for me. 1-to-1 parking in a fantastic location.
Okay, great. And when you say the location, is this in your sweet spot in the downtown Salt Lake area?
This is definitely in my sweet spot. I live 15 houses away or so, 96 South, right between the University of Utah and downtown, kind of on the periphery of a neighborhood we would call 9th and 9th, which is absolutely phenomenal.
Perfect. Okay, and then talk to us about how you sourced the deal. Where did it come from?
It came from a bird dogger flipper, someone who I had met probably when I was at a RIA or something, who knows that I am involved in multifamily real estate. They had the opportunity because they were friends with the grandson of the owner and actually lived in the building. So we got a little bit of a heads up right before they had identified they wanted to sell, and they kind of took a flyer on this guy, and who chose, subsequently brought me into the deal, and we kept him in as a partner. But yeah, so
okay, great.
Off-market relationship.
Yeah. So a relationship, and again, coming back to the importance of being known for your area of business, getting your name out there, having a good reputation. Someone that you really didn't have an extensive personal relationship with, but knew that this was your area of business and your geographic area of focus. Yeah. And he brought you the deal, which came from, this was never listed, correct? It was completely off market, never hit the market?
They listed it soliciting for a backup offer. I don't know if they had as much confidence in us.
Gotcha.
Out the gate. So they did bring it to market after we were under contract.
Gotcha. Okay, great. All right. So talk to us about what was it about this particular deal, and what was the business plan going in?
Yeah, sure. So it met the number one criteria, which was it was in the area I like, and it's actually really well located, even within this aspect of the market. So I really liked that. I really liked that it was heavy on the 2 bedrooms. The valuation that they were asking was reasonable. I've had a little bit of a tougher time getting there with existing assets versus the development, because the returns just are, it's a more conservative investment. But this one had enough meat on the bone, and the location was just something that I said I had, I really would like this in my portfolio. And our strategy all along, because of the strength of the location, was a long-term hold.
Gotcha. Okay. And was there any particular value add component to it, or was it already performing? You were just going to, buy it and let it ride, or did you have a particular plan to do any value add?
No, we had an improvement plan. For me, my personal investment strategy is go in there, get the work done, and get the asset kind of to its peak state as soon as possible. I don't like, using the cash flow to improve properties. I like getting my CapEx out of the way. So we identified about a total of about $500,000 worth of property-wide improvements. $150,000 of that was dedicated to the exterior and common. mansard roofs really aren't the most attractive. So we're trying to come up with some ways to do that. And then the rest of the money was allocated for interiors. There was definitely meat on the bone. So we bought it at a 4.8 cap going in, which was lower than I would have liked, but it worked. They were only charging basic rent. There was no auxiliary income, no rubs, parking, internet package, anything like that. So, there's, in our market, that's probably $150 a month per unit if you're aggressive on auxiliary income. So that was without even touching rents. We knew that there was upside there just with other assets we own in the area.
That's great. Great opportunity. Cool. Do you mind sharing what the acquisition price was?
Yeah, we paid $3 million for it. We were ecstatic. It appraised for 3.45. So we knew we were getting a good deal walking in, and I made everyone pretty happy with that.
Yeah, I bet. Can you talk to us about the structure of the deal? How did you finance it?
We went to a local credit union. That's kind of my bread and butter. I really like those local relationships. I understand some of the bigger institutions can give you better terms, but I like knowing the person I'm talking to and go back to them over and over. So this is a structure we've done before. We put, I think, a 70%, maybe 75% loan to value on the asset right out the gate. And then they gave us an additional construction second behind that we were able to draw on to meet our improvement strategy.
Interesting. And so did they finance the entire $500K of CapEx?
Yeah. So I think we put right about $1 million down out the gate, and that was kind of our total contribution.
And did you bring in outside investors, partners?
We did. So just one investor on the whole thing. That's probably also something that is maybe a little different for us. That's our preference. Deal with one person per asset. So I do have a partner on this deal who kind of brought the capital relationship to the table. We have a whole portfolio of assets together. So we're partnered up on this one, and then he brought one money guy to the table.
Gotcha. Okay. Perfect.
Yep.
Well, great. And so where is it at today?
Well, I think we were hoping we had pretty
well, and let me again give the caveat that we're in the middle of COVID-19 right now, quarantined, so talk to us about where it's at today with that caveat.
Where it's at today is basically where we started. So we pulled back 100% on CapEx. We're just clicking the pause button on there. Keep trying to stay conservative, keep the rents low, just until we can kind of get through this environment. So it's maybe not as not where I would hope it to be, but we're just trying to be responsible and kind of see where this thing takes us.
Yeah, understandable. Well, I appreciate you going into detail on that. That sounds like it is a great deal and will continue to be a good deal. Oh, I did have one other question about the financing up front. The 70/30 you got from a local credit union, and then you got the additional for the CapEx, the second on the CapEx. I'm curious on the debt on the front, the 70/30. What was the debt structure on that?
So we 4.25% amortized over 25, due in 10 with the adjustment at year 7.
Wow. Okay. That's great debt.
For a local credit union. We were happy with it. We have a relationship with them, and that's something that I think is important. Realize that the lender's putting up almost all the money, so keep them happy and be a good customer, and we're definitely pleased with it.
Love it. All right, man. Well, look, you've been gracious with your time. I really appreciate you walking us through your story. I think your story will resonate with a lot of individuals that are listening, whether it be your transition from being excited about a completely different career path in golf, and then making that transition into real estate and slowly growing into Well, and I don't know that I'd necessarily say slow. It's a pretty fast pace that you've gone from, working a model home as a residential agent to where you're at today. And so, congratulations. And I think it's an inspiring story for a lot of people that want to, get into the space or do bigger things in the real estate realm. And then also walking us through this 21 unit value add deal, which looks to be a great deal. And I'm excited to see what happens with it after we get out of this craziness that we're in.
Yeah. Stay tuned. Hopefully the story's not over yet.
Yeah. Maybe I'll bring you back on to do a little update on that particular deal once it all plays out. But I do want to start winding down here. And so I've got a final 3 questions for you. You ready?
All right, let's do it.
Okay. What's the biggest challenge that you've faced on your apartment investing journey so far?
Maybe biggest challenge, biggest mistake is probably, I don't think I fully gave the passive investments the credit that they were due. Coming from the fix and flip game where you were turning, fairly substantial profits in a short amount of time. It was kind of like, why worry about $200 or $400 a month in cash flow? And I think I'm not going to go back and do it over, but I think I probably would be in equally as good of a spot if I would have had a little more respect for the long-term benefits of real estate ownership earlier in my career instead of being so focused on selling.
Great. Thanks for that. What's the biggest win you've had so far on your apartment investing journey?
I think developing a niche has been really a big thing for me. Super focused on real estate, specifically in Salt Lake City, Utah. So I think I understand the market pretty well, and I don't think I would have the level of competency if I would have allowed myself to be spread out geographically. I'm just not that good.
Yeah, great advice. And maybe that'll fall into this. I don't know. We'll change it. But what's the best advice you have for someone who's just starting your apartment investing journey?
Yeah. So my advice kind of depends on where you're at in the journey. If you're like at a W-2 and you're really at step 1, the biggest thing that I preach to people is figuring, you have got to understand numbers well enough to discipline yourself to live on less than you make. You can never become an investor until you become a saver. And I've seen people who make very, very substantial salaries, lots of income, and they still don't have anything because they just blow through it. So my first advice to people, and it's not sexy, it is slow, it's not very fun. You have got to learn how to reduce your living expenses so that you can get the capital to invest. And then from there, once you have that capital, I think a lot of people, and I'm not sure where this, maybe it's Utah being entrepreneurial, a lot of people I think want to just do it themselves. And I would see a tremendous amount of value for most people once they get that $50,000 saved or 25 or whatever it may be, go be a limited in a deal and do it knowing that you're basically paying for an education that's giving you a return, not only monetary. You've asked some of these questions. How are you can learn about what loan to values are and debt coverage ratios, but until you're on the other side of the table closing that deal and you're putting your money in it, it just doesn't mean the same amount to you. All the seminars, books, whatever, get involved and work with a general partner who is willing to recognizes your position, is willing to help. And the amount of contacts I could give someone and it would just be so substantial for their next deal that they wanted to segue into. So I'd be an LP and I'd be open to that.
Yeah, that's great advice. Well, Jordan, I appreciate you taking the time. I think that a lot of our listeners will really appreciate this conversation. I think you have a great story, an aspiring story that, in my opinion, is just starting for you. I anticipate, some big things in the coming years, and I appreciate you being willing to take the time and share your journey with us. What's the best way for people to connect with you and learn more about what you have going on, or even about some of your future investments that may be coming available?
Sure. Overall, I like getting phone calls. I like talking to people on the phone. So you can call my office phone, which is 801-478-0662. And then my email, jordan@tagslc.com, TAG SLC. And you can check out my website there as well. You know, we're trying to get better, but email or phone is probably the easiest way to directly engage with me.
Love it. And we'll have all that contact info in the show notes. Jordan, thanks again for your time. I appreciate you coming on and look forward to connecting with you again soon.
Awesome. Have a great day. Thank you,
Take
guys.
care.